This conference will now be recorded.
Okay, so in the previous session, we worked with the security deposit and we have seen how to create the security deposit. Basically, security deposit is of two types. One is the financial, basically, actually in terms of cash, what you're getting, and another is non-financial security deposit, which means it will not be in the form of any cash. We are actually posting what you call a non-financial security deposit, like a indemnity bond or the bank guarantee. Okay, so these are also another kind of security deposits what you can create in the system. So how to create a non-financial the security deposit we will see, and then in the previous session we created security deposit entry directly by using the transaction in the ISU FICA. But we can also create a request for the security deposit while you do the move-in process. Okay, so that when the move-in will happen, the contract will be created, and for that particular contract what we are creating, we will request the business partner to provide the security deposit. So first we will go to contract account receivable and payable, go to the account, and then create security deposit, and then enter. Here we are creating non-cash security deposit, okay, and the contract account for whom we are creating the security deposit, company code group 555. We can select 5501 as the contract account and then create. So it is basically type of security deposit is non-cash, and the reason for the request is new customer, and type we are selecting private guarantee, bank guarantee. Request amount is 10,000 rupees, and then starting date is going to be from the 01/12, or we can say from today, that is basically 16/12/2019. Return date. Okay, what is return date? Return date and expiration date. There are two dates. This indicator specifies when a security deposit can be returned, such as due to good payment history. Return date is automatically proposed from the start date and validity period. But here we are giving it as basically 16/12/2020 expiration date. If the guarantor only guarantee for a limited period, then the expiration date specifies as from when non-cash becomes invalid. Okay, so we don't have to give this thing. Either you can give return date or the expiration date. Guarantor we can provide. If some other business partner is guaranteeing, then we can provide it. That means on behalf of the another this contract account, another contract account is basically guaranteeing, then you can give it or leave it open and then save it. So here you have created a security deposit 51, but because it is not having any cash, it will not post to any document in FICA. Okay. Whereas if you request a cash security deposit, then the FICA document is posted. As you have seen last time, a statistical posting will happen to FICA, and from there we actually receive the incoming payment against the cash security deposit request, which will be treated as down payment. Okay, so that down payment will remain with the company as long as you release the security deposit. When you release the security deposit, the amount will be added to contract account as open credit, which you can adjust with the open debit items. Okay, as long as it is still held in the contract account as a down payment, it is locked against clearing. It cannot clear any open items. Okay, that's the process. Now we'll see the third method, how to create a security deposit request using the move-in process. Okay, because in ISU, the contract is created when the move-in happens. So as a contract obligation, the business is asking for some kind of customers a cash security deposit should be furnished. Like in certain area, we find the customers are unreliable. So in those cases, we will say you have to furnish a cash security deposit. Or it may be by the rule for any customer, the cash security deposit has to be furnished. It can be like residential or non-residential. We can have the amount fixed. Okay. But now for this to do, we need a moving document to be prepared. Okay. Earlier we prepared one installation data. We will see what is the installation data we have prepared for the division 55. We created one division as 55 electricity. We maintained one installation for which we did the ISU billing and then invoice was prepared. The installation is 168. It belongs to a premise 144. Okay. So we'll create one new, what you call, installation data for a new premise. And for that premise, we are going to do move-in process. And in the move-in control, we have got a field called security deposit amount should be requested. Okay. So taking 144 as the reference premise, premise is basically a enclosed spatial arrangement in the connection object. Like in a connection object is a building, as you know, in ISU, it's an apartment building. So each apartment will become a premise. Okay. So for that premise, the partner will make a move-in and system will create a contract. And then we will have what you call also request for the security deposit created. Okay. Now we will go to basically create one new premise, copy, and then go to technical master data, premise, create. We are creating with reference to a premise. And here premise is created for the connection object 73, floor number 1, room number 103. And then save it. Okay. So we created one installation as 182. For the premise 182, we will create now installation data. So premise is 182. So to create an installation, we'll go to create installation ES30 and key date. We will say it is valid from 01. We can make some historical data moving process. So we are in the month of December. We will say we made one installation for a particular premise in the month of July. Okay. So 01/07 2019, division is 55, and then installation. We can copy from an existing installation for the division 55. It is having this particular installation, copy, and then replace the premise with the new premise, what we have prepared. The installation premise is 182, enter, and then save it. Now we are not adding any, what you call, the device for this. Okay, it's a non-device installation, like a flat rate billing installation, we can say. But anyway, you're not going to do billing now. We already know how to do billing. Now we will do move-in process. So installation 202 was prepared. Okay. So the installation is available from 1st of July. So we will do move-in from the 1st of July. So go to customer service and then process execution, move-in, create. And move-in date is basically, now here in the control, in the ISU consultant will maintain settings for the security deposit. Okay. So if you go to the ISU module, create the SAP utilities, and then select the customer service, and then process execution, move in, move out, and then move in. Define the move in control parameters at the document level. Okay. So we have maintained for 555 document level the settings which are required for creating the move in, but important controls will be also maintained at the contract level. Okay. Select here. We have maintained for company code 45 division 55 building class. So here we can say automatically request security deposit, request the cash security. Okay, you can say request cash security, non-cash security. You do not request, but we are given here request for the cash security deposit. So now we'll go to EC50E and movement date is 01/07 and 2019. Okay, 01/07/2019 and the contract account. Okay, the contract account we are maintaining for company code group 555. So here let us use one contract account 5202 and then the installation. Okay, the present installation we have is 202. Enter. So installation number is 202. Now it doesn't have any device, so it will just indicate this is a non-device installation, like a flat rate billing installation. No device allocated. Now in the contract section, we have to maintain the ID for the account determination. So we have got ID here, account determination ID as a residential electricity. And then here we can see request the amount. Okay, and this is a request amount what we're giving as 10,000 rupees. This is a cash security request, and then request reason new customer. Okay, so whatever data you enter while creating the security deposit in FICA, same information we are giving here. Only thing there we are creating the request document upfront, but here the security deposit request has happened here for 10,000 rupees, and the reason is the new request. Okay, exempt security, there is one field here, that is a letter of recommendation, low consumption special license. Okay, like in some cases the security deposit is waived off, like a special approval or something is there, like the NGOs or something, so where the security deposit is not collected. So any such requirements are there, we can give exemption of the security deposit. Okay, now we will save it. It will prepare a welcome letter, and in the background it will create one security deposit request. So it is processing the contract document and a welcome letter. So ISU move in welcome letter, output device is LP01. Go for the print preview and then print. So whenever the move-in happens, the contract is prepared in the background and a welcome letter will be prepared. The welcome letter will indicate what is the date of move-in, what is the contract created, and if any device is there, it will show. Now, since the contract is prepared, the contract is updated in the installation. So if you go to ES31 installation 202, a contract has been effectively created from the 1st of July. Okay, and the contract number is 198. Now, because you requested the cash security deposit, you should have created a request document in the system. So we will see whether any request document has been created. Go to the FICA and then change security deposit contract account 5202. So show any contract specific security deposit created. 52 is the cash security deposit created. So here it has created in the background. Okay, so we will say continue, and then here we can see the security deposit was created because of the move-in document. Okay, So we can see here a moving document was created. Sorry. So here you can see moving document 198. Because of this 198 document, the security deposit was requested. Reason for the request is new customer and request amount is 10,000 and then document posted is 1025. So basically it will make a statistical posting to the contract account where only BP items are created and the amount is 10,000. Okay. The purpose of the statistical posting is it is not actually a receivable. Okay. We are requesting the customer to make the payment on account of the cash security deposit. So the customer will have to make a payment which is going to be treated as a down payment. Okay. So here we can say our starting date is 1st of July 2019 to return date 1st of July 2020. Okay. So that means that is a validity period which is actually fixed in the system. Now we will see what is this document which has been created. Double click. It will not have any GL item. It will have only BP item. No GL item because it's a statistical item. But in the open item, you can see the customer account has been debited with 10,000, but this is a statistical posting. Okay. So it will not show in the open item, but you can always see it as a kind of a, statistical item. Okay. So if you go back and then check the open item balance 5202 FPL9. If you go to FPL9 and then list type is open item, then we won't see any open item here. Okay, it is showing some open item 500 rupees, but if you select all the items, then it will show the statistical item also for 10,000 rupees. Okay, 1612. This is the request. So this amount they have to pay. Okay, so now we will go to FPCD, enter the incoming payment. Company code is 555. Document date we will say 05/07/2019 and then 05/07/2019. Value date is also 05/07/2019 and the reconciliation key we can put it as T100, currency INR and account is 5202. Now select the items. It is showing 500 and 10,000, but we are clearing the 10,000 rupees. So when you enter this 10,000 rupees, it will become the what you call the open credit item. It's not open credit item, it will be a down payment. So now post it. Continue. So now if you go to the account balance, okay, FPL9, if you select all open items, you'll show down payment. Down payment is received on 5th of July, that is 10,000 rupees. Okay. So now it is showing it as an open credit item. So you can see here, credit is open. Okay. But you cannot adjust it with any open debit item because it is locked for the clearing. Okay. So if you go to change the security deposit and then see here, the effectively start date is taken from 5th of July because the payment received on 5th of July. From the start of the payment date, initially maintained as 1st of July, but because the payment was received on 5th of July, the security deposit period is starting from 5th of July 2019 to 5th of July 2020, and it is paid. The status is paid. Okay. Now, subsequently, when the move out will happen or after 1 year, the security deposit can be released. Okay. Now, if the security deposit released, how we can use it? That we want to see. So let us create one security deposit, one more for another contract account, pay the amount, and then how to release it. And when you release it, what happens? We will see. So straight away I'll create one security deposit for another contract account. So contract account we will select for the company code group 555. Let's say 5201. Create a cache. Type of request is the new customer. Request amount is, let's say, 5,000 rupees. And we will say it is starting from effectively 01 and then 01 2019, 01 2019, and then ending on 01 2020. Okay. So we are saying a security deposit entry we are creating for a new customer 0101 and return date is 01 2020. Okay. So now we will post it. Then again, it will prepare a posting document, statistical entry in the contract account 5201. Okay. Now, when you enter the payment, it will be shown as a down payment. So right now it is requested. Now we will go to FPCD. Okay. Process the security deposit. So company code 555. Contract account is this. Let's say customer paid the amount on 0301 2019, reconciliation key, and the posting date is 0301 2019, and then select the items. So we have got 5,000 rupees as the amount, okay, which is the second deposit. Select it, clear, come back, and then amount is 5,000 rupees, and then post. So we have to give the value date. Value date is 0301 2019, and then post. Continue. Now this amount will be shown as down payment. So if you go to FPL9 and if you see all the open items, contract account for company code group 555 5201. So you can see a down payment 5,000 rupees, okay, which is posted on 0301. But right now this is a down payment. Even though it is an open credit, we cannot adjust it with any open items. But there are some receivables here, 3,250, okay. But if you do the account maintenance, it will not adjust the open debit with the open credit unless you release it, okay. So now how to release the security deposit, we will see. So go to create the security deposit. Right now it is in paid condition, release, okay. Partial release means you are releasing partially, release means full amount, okay. So release, if you release all cash security deposit, then the clearing restriction is removed, okay. That means before releasing, there's a restriction for clearing, okay. You cannot adjust this down payment with any other receivable, okay. It is supposed to be like, locked for the clearing. If you release all cash security deposits, then the clearing restriction is removed from all the related cash security deposit amounts. If the return date is in the future, it will be set to the current date, okay. That means we are releasing it today, even though it is in the future date, we are releasing today. Do you want to release? And also in the future, we'll be working on the interest key, okay. When the interest key is maintained on the cash security deposit, we can also calculate the interest amount, okay. Now, interest paid, interest amount accrued until the date of release will be added to the contract account, okay. That means we are basically having the 5,000 rupees plus the interest rate which is accrued for that particular, the contract account till the particular date, okay. So right now there is no interest calculation. We will see in the future how to add the interest amount to the cash security deposit. So now we will say release all the deposit, yes. Cash security deposit 53 was released fully, okay. So now if you go to change mode and then if you see it is in the status released, okay. So it is showing a document as 10246, which is a release document. If you double click this and if you go to open item, the amount released is 5,000 rupees. Okay. Now, if you go to the contract account, okay, if you go to contract account, FPL9, and then select all the open items. Now 5,000 is added here. Down payment is removed and it is added in receivable. But this is a open credit item. 5,000 is an open credit item which is available. So we can use it for clearing. Okay. So we can use the account maintenance. When we do the account maintenance, we can adjust the debit items with the credit items, open credit items. Okay. So how to do adjustment? We can see, or let's say if you enter a incoming payment, okay, actually right now incoming payment is actually not in the plus side, it is on the minus. Okay, so if you don't have to enter incoming payment. Suppose, let us say, for example, the open item after accounting the credit balance of the budget billing of the security deposit is 500 rupees. If you make the payment, then it will account for the open credit. But since we are not entering payment here, we can do with the account maintenance. So we will study in future account maintenance. Right now, with the existing clearing category, we can do the account maintenance. So go to account maintenance for this particular contract account. In account maintenance, what it will do? It will propose which open debit items can be adjusted with the which open credit items. Okay. So go to the maintain account. The contract account is this, and then currency INR, and then create a proposal. Select create proposal, continue. Now it will say these are the open debit items 3,250 adjusted with the 3,250 from the open credit item. So 5,000 is actually open credit item, out of which we are adjusting 3,250 with the two open debit items. So after accounting this, 1,750 will be shown as the open credit item. So now we will save it. And if you now go to FPL9, you can see there's no debit balance, there is a credit balance. So if you continue here, so you can see 1,750 is the value which is shown as open credit. Okay. So this is the amount which you can pay to the customer, or you can also keep it in the future for the adjustment. Okay. Or if it is going to be there for a long period, then you can also pay the interest on this. Okay. So right now account maintenance has happened. So it has adjusted the open item with the open credit item. And here the open credit item was basically the down payment account, what we had received as the cash security deposit. Okay. But previously cash security deposit was locked for the clearing. But since we released the cash security deposit, it was available for the account maintenance. Okay. So this is how we release it and then use it for the adjustment purpose. Okay. Or if the move out happens, this amount, I mean, you don't have to release. Suppose we had a situation where the move out will happen. Okay. When the move out will happen, automatically security deposit will be adjusted with the due amounts. If anything is still pending, that amount can be paid to the contract account as the balance amount. Okay. So this is how it will happen. So these are the processes related to security deposit. So we have seen the processing of the security deposit, and in future we'll again come back to a security deposit to work with the what you call the adjustment, that is basically the interest adjustment. Okay, so right now interest configuration we have not done. So in future when you work on the interest configuration, we will see how to calculate the interest charges on the security deposit. Okay, so after doing this, we will see what is the next section we have to work. In the business transactions, if you go to financial accounting new and then contract accounts receivable and payable, and then we go to business transactions, automatic clearing, interest calculation, dunning notices, returns, deferred installment plans, loans, write-offs, transfers, reversals. So these are the things what you have to work. Okay. So now we can start with the dunning notices. Okay. So what is dunning? how to do. We'll see dunning notices. In the following activities, you create definitions necessary for the dunning program. Okay. Basically, dunning is a periodical activity what we'll do in the system. Okay. That means dunning is a process where dunning is applicable when the contract account is debited with the open items, receivable item. The customer has to pay the amount as per the due date. Okay. But if the customer does not pay in time, we have so many consumers available in our operation. We do not know which consumer has paid the amount in time or which consumer has not paid the amount in time. So we start doing the dunning activity. So dunning activity is a periodical activity. The business might be doing on everyday basis. Okay. Certain accounts are selected and then for them we will do the dunning run. Okay. So when the dunning run will happen, it will find out which accounts are crossed the deadline, and for them the dunning level will come into the picture. Okay. Basically, dunning level means it is in the configuration we are saying, suppose the open item was not done so far. Okay. That means it was not subjected to any dunning, but now that the open item has crossed the due date, it is now available for the dunning. So dunning level 1 has reached. Okay. So when the dunning level 1 has reached, it will have a corresponding dunning activity. Okay. The dunning activity could be like, sending a letter to consumer saying that your item is not yet paid, it is already due, so please make the payment immediately. Or if you already made the payment, ignore this. A soft letter can be sent. And then again, after 10 days, there will be frequency. Okay. That means if you do again tomorrow dunning, if you include this contract account, it will not come for dunning because there is some frequency. Okay. If we say the next dunning will happen after frequency of 5 days or 6 days. Okay. Then when you do dunning on the 7th day, what will happen? Again, the dunning will happen because it has already crossed the period and customer still has not paid the amount. Okay. Now it will reach the dunning level 2. And in dunning level 2, we are saying a legal notice, a harsh letter will be sent. We have referred to the earlier letter, still you have not responded, amount is already overdue. So, the wordings will change and then it will be sent to the consumer. So like that, there can be multiple dunning level. In the third level, probably we'll insist for the security deposit. In the fourth level, we might say you have to now, go for disconnection. It will go for the disconnection. So disconnection process has to be customized in ISU if the disconnection is there, because in utility, disconnection is a customer service activity. Okay. It may not be there in other solution, but in other solution, it will be in some other form. Like maybe in telecom services, your telephone will be blocked for making any outgoing calls. Unless you make the payment, you cannot make the outgoing calls. Although you may receive incoming calls, but you may not be able to do any outgoing calls. So according to the solution, the particular dunning activities will happen. Okay. So all this part will come under dunning notices. And the important setting here will be dunning procedure. That dunning procedure you're going to maintain in the contract account. So you can maintain different types of dunning procedures for, residential consumers, dunning procedures for non-residential consumers, like that. Okay. So basically, according to the law, what is applicable in the company, for the residential consumers, the dunning will happen, and also for the non-residential consumers or the industrial consumers. Okay. So let us see step by step what all we can do the setting. So go to define the dunning procedure category. Okay, select it here. So dunning procedure category. In this activity, you define the dunning procedure types for the dunning procedure. Okay. The defined dunning procedure types are assigned to dunning procedures in the configuration of the dunning procedure activity. Okay. So here we are defining procedure type and we assign it to dunning procedure configuration. Example, insurance company. Define a new dunning procedure type if necessary. Copy event tree ended and modify it accordingly. Okay. So event management also comes into picture, which is called FQ events. So define the dunning procedure category. Okay. So we will say here we give it as 50 as the dunning procedure, but actually it is better to make it as Z5. Z5. We'll make it as household consumers. Likewise, we can maintain Z6 for commercial consumer, Z7 for the industrial consumer, subsidy consumers. So different consumers we may assign in the contract account the dunning procedure category or dunning procedure type. Okay. Define the dunning level categories. So dunning level categories are basically the steps in dunning. Okay. That means sequential activities. Okay. Let's say 01 is reminder, 02 is legal proceedings, 03 is the last dunning notice. Okay. 04 is repeated dunning, qualified dunning notice, secret deposit request, disconnection. Okay. That means whenever the particular level will reach, it will automatically do the activity. For the level, we will maintain the activity. These activities are maintained in the form of the module program, okay, function module program. So let us assume 01 we are using reminder, okay, first one, and then 02 legal proceedings. Now define the charge category for dunning, okay, like whenever dunning will happen, we can also include some dunning charges, okay. That means we are doing some processing like document processing, sending it, following it up, okay. So we are going to charge that amount to consumer as the charge amount, okay. So this charge amount will be debited to contract account statistically, but there is a separate setting for this. So when you're working on charges, we will see how to add the charges also. There's a separate main transaction and sub transaction, and based on that, the charge category will come into the picture. Define document type for dunning charge category. So charges and charge category document you'll see separately, and charge schedule. Okay, so these three will come separately later. Define specification for interest on arrears, Italian tax, configure the dunning activities. Dunning activities are basically connected to a kind of a module program. Okay, these module programs have been given, but if you want to modify them, you can create a new module program and then assign it. So that will be taken care by the ABAP team. So here we are saying R003, okay, R005, okay, or let's say generate disconnection document, deactivate instrument, print dunning form using the corresponding container, okay. So here you can say R004 is basically print a dunning form using the correspondence container, okay. That means when the dunning happens, if the level is 01 reminder, the activity will be basically R004 print a letter to consumer, or R005 is a request for the cash security deposit, and R006 is cash security deposit after two device disconnections. Okay, that means the disconnection is one activity what we are giving straight away, that is R002. That means if the level 1 fails, level 2 or level 3, we do directly cache a generate disconnection document. But R006 will happen only when the devices have been disconnected twice. In the historical data, once the disconnection happened, then the customer resumed the operation. Again, second time also the disconnection happened. The third time we are saying the customer has to pay the cash security deposit, okay, like that. Otherwise, straight away create a generate request for cash deposit at any of the level, not linking with the device removal or device disconnections, okay. So basically these are given as a kind of a module program, and only for the correspondence letter we got an additional form, okay. This is the letter format what we're sending it to customer. It's called as form layout. It's called as form layout design. So the ABAPer will maintain the form layout designs. Okay. Here SAP has given one template as ISU dunning, but this is basically a system defined template, a kind of a sample dunning letter. But tomorrow the ABAP team can actually develop the new application form according to the business requirement. Okay, so these are the dunning activities. Now we will go to configure the dunning procedure. The procedure is defined for the dunning procedure category. Okay, so select the configure dunning procedure, and here we can see dunning procedures can be defined according to a requirement. So for each dunning procedure, we will say what are the levels, and if there are two levels, what should be the difference in number of days, and for each level, what is the activity we are supposed to do it. Okay, so we'll create one new dunning procedure for our requirement, and then we will assign it to the dunning procedure category what we have created. So dunning procedure category will go and sit in the contract account, and to that dunning procedure category will be assigning the dunning procedure. Okay, so we will create one new dunning procedure as Z5 procedure for residential customers or for the household consumers. And then here dunning procedure category is going to be Z5 what we have created, and then we will continue and then save it. Then what are the levels in this? Okay, select the particular procedure and select the dunning levels. Give the new entry. Dunning level is 1. Okay, soft letter or reminder. Okay, soft letter or reminder. And dunning level category. Dunning level category, it is basically a reminder. Okay, select the reminder. Days in arrears or days in frequency. Days in, you need not maintain both. It will be either days in arrears or days in dunning frequency. Okay, now days in arrears means, like first level we will say if the amount is due on, let us say, on 1st of 30, this is December, let's say 30th of November the amount was due, and after that it becomes dunnable, but we are giving, let's say, 2 days or 3 days grace period. Okay, that means if the customer has not paid the amount by 3rd or 4th of December, it becomes dunnable. Okay, that is days in arrears. Dunning frequency means, like, how frequently it can happen. Suppose the dunning has happened last time, after how many days it will again happen. Okay, so either you can maintain days in arrears or dunning frequency. So the first dunning level, if you say in arrears only, then 3 days. Then the second dunning level will say another 10 days later. Okay, from the previous, or you can give second time dunning frequency as 10 days. Okay, that means you can maintain it according to the requirement. So here we will say days in arrears. So if we select here F1, the number of days that have to be elapsed since the due date for payment for an open item to receive the dunning level. Okay, so if 3 days have passed from the due date, then the first level will happen. A further prerequisite is that the dunning frequency has been reached. Okay, so in customizing, you can define for dunning procedure that the days in arrears and dunning frequency are to be calculated in accordance with the factory calendar. Okay, so here we'll give it as days in arrears as 3 days, and then charge schedule we are not maintaining at this moment of time because it is supposed to be having separate configuration of the transactions. Dunning frequency not required. Then always done, you can select here, and then payment deadline, dunning payment deadline. What is the payment deadline? The payment deadline is the number of days given to customer to effect the payment. This number of days is added to issue date of the dunning notice and thus gives the payment deadline for a dunning notice. Okay, so we'll say 2 days. When the dunning has happened, we give 3 days as a notice to customer to make the payment. So in the letter it will say after the receipt of this particular letter, you have to make the payment within 3 days. Okay, so now continue and then save it. Entry 3 does not exist. Okay, this is, I entered in the wrong place. You have to enter in the days deadlines, not defined. Okay, dunning activity you have to define. Amount limit also not given. We'll maintain it. Okay, now payment deadline will give it as 3 days. it'll keep showing this is missing till we maintain the whole data. Okay, there's nothing error here, but we are still supposed to maintain the amount limit, dunning activities. So till that is done, it will keep showing the configuration is still pending. Okay, so now we will save it. Dunning activity not defined, and also it will say amount check has not been defined. Okay, now we will select for this particular dunning level the amount limits. Okay, select the currency, amount limit, Indian rupees. When the dunning should happen? Only if the amount is more than this amount. Okay, that means we are setting a kind of a threshold amount here. Okay, if amount is less than 1000, then there's no need of dunning. But if it is more than that, then the dunning should happen. Okay, so what is amount limit? Items in a dunning level are only done if the total amount of the items due for dunning in a dunning group that have been reached the dunning level. Okay, suppose the open item has got basically when you create a posting document, FICA document, in the FICA document there could be one or many line items. Okay, but basically when you post a FICA document, each posting is happening as a separate entity in the same document. Okay, so all the items put together, the amount should be more than this particular amount. That's a threshold amount. If the amount is more than that, then only the dunning should happen. Okay. So we are saying here, just to test with, we'll say 1000 rupees amount limit. If it is 900, then dunning will not happen. Enter and then save it. And then we will select the particular currency and then go to dunning activity. Individual entries cannot be put. So amount limit, dunning activity, and then okay, or you can come back here, select the dunning procedure and dunning levels. Dunning level is Jet5, and then select the dunning activities. Then give the new entry, amount limit. Dunning amount limit from which a periodic dunning activity has been executed. An activity is assigned to every dunning amount limit. That means if the amounts are increasing, then the separate dunning activity can also happen. Okay. So here we are giving amount limit as 1000 rupees, currency INR, and then credit worthiness will not maintain right now. Sequential number for the multiple number activities. Okay. So right now it is only one. Okay. And then what is the activity? The activity here is going to be basically printing a letter. Okay. Printing a letter, generate a letter. Okay. Print the dunning form using the correspondence container. Okay. And then save it. Dunning activity not defined for dunning level 01 in the dunning procedure Jet5. And then save it. Dunning activity not defined for dunning level 01. Dunning level 01. Come back and then save it. In dunning 01, in dunning procedure 5, no dunning activity has been defined with the amount limit 0. Yeah, we also have to maintain one line for 0 amount. Okay, 0 amount also you have to maintain. So go to amount limits and then INR 0. Already exists. Okay, not here. Sorry. So you have to maintain here dunning activities. So you have to give here new entry. That means basically what you're saying, from 0 onwards, it is going to be, we'll first remove this, then we'll understand. We'll first remove this. Then we'll say new entry. Amount limit, we're giving it as 1000 rupees. Currency INR. And then the credit worthiness, we are not updating. Sequential number 1. Activity here, we are saying basically generate to maintain from the limit 0. Okay, from the limit from 0. And then activity, we are saying print the dunning form using the correspondence container and then continue. Then you can give one more limit. Let's say that one more limit we will say if the amount is, that means in the Dunning level 1 itself, soft letter, your activity could be like basically sequential number 1 R004. And if the amount is added further, that means suppose we have done the invoicing on particular date, Dunning happened. After that, we added one more open item, okay? And that item also is added into the total due amount. Then for the amount limit, you can have the separate activity. So amount limit, we will put it as, let's say 5,000 rupees and above, currency INR, and then sequential number 2. Here also you can give it as R004, okay? So here it can use the second, you can also use another category, okay? But here we are using Dunning level 1. We can add it separately, one more letter for this. So you can again say if the letter, if amount limit is more than 5,000 also, we are sending a letter, okay? But in the Dunning level 2, we will say it will go for the legal proceedings or something, okay? So we can select that. Or yeah, here level is only 1. So right now we are using level 1 only. Level 1 is basically soft letter reminder, which belongs to category reminder actually. So here you can see the Dunning level category is 01 only, okay? In the reminder itself, you can send a twice letter. You can think like that. The another amount what you're adding is only additional open items if added. It's not necessary to add. If you add it, then it will be considering the additional items which are added to the existing open item, okay? So that is the only purpose of maintaining this particular information. Now we will save it. Now we will test it tomorrow, how this process will run, okay? So right now what we're doing, we have maintained the configuration. Now, how the testing will happen, how it will work, we'll do the testing tomorrow. Then we start configuring additional levels, level 2, level 3. And in some process, we have to also link with the ISA disconnection. For disconnection, work management is required, okay? So I'll try to set up work management either in our system or in the existing system. I'll show you the disconnection process, okay? That means when it reaches the level, it will automatically receive a disconnection. But disconnection means there should be device. So far we are done without device. So I'll show it to you in another system where this activity can happen, okay?
Gotcha.
So tomorrow we'll test the level 1 and then we modify the procedure.
Okay.
Is it okay?
Yes, sir.
Okay. Okay.